Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. As we start the last week of the month, there is no major change on the monthly time frame. However, on the weekly, the potential excess that we had 2 weeks ago was erased, leaving a very questionable low last week. That put in question the structure that we have down here because it stopped only for bit less than four handles from the already low that we had. So we keep an eye on that. On the daily, the early week attempt to maintain the highs of the range failed, and after exposing some weakness on the Wednesday session, on Thursday we gapped down aggressively, completing the rotation down to the low of the range. Friday and Monday saw very low volume due to the Memorial Day observance in the United States, but it's important to highlight that there was no immediate continuation to Thursday's attempt lower, and we have a potential daily excess down here that will need confirmation, and confirmation will see the remaining of the gap being closed. But we need to highlight, as we just said on the weekly time frame, that the low here is not that great. Zooming into the market profile, I will highlight some important stuff from Friday's session. Let me zoom out a little bit. First of all, the market opened between two gaps. The gap that we left on Thursday is what is remaining of that gap, and we gap up versus Thursday. So on Friday, we opened between two gaps. That denoted change from the previous session. Now, what happens next is the gap to the downside was closed, but value was solidly established higher. That's an important data point. Also, the Thursday's afternoon high, which was right here at 28.24, was rejected early morning. As we closed the gap, we tried to probe lower, and that was rejected. We saw the rejection here, and we stay above that for the rest of the day. That's important. That's important because there was a clear attempt, and actually later in the session we had a second attempt to go underneath that afternoon high, and that was rejected. So those attempts were rejected. We maintained the highs. That's very good for the market. But remember, Friday was a low volume session, same for Monday. So we need to get some confirmation of this. So with Mondays being within range, and actually was within the end periods range. So we will take Monday as no change versus Friday. So the immediate focus for Tuesday's session is to assess the potential continuation from that bounce seen on Friday. So maintaining these highs and continue up. Acceptance above 28.35 will signal continuation and increase the odds of testing the remaining of the gap. Let me close this down. Acceptance below 28.25, which is that afternoon pullback that we had here, will denote change and potentially expose weakness in the market. Now, that will increase the odds of testing Thursday's daily excess, which is below this area below. And if that happens and we start moving in this direction, we need to always keep in mind the weak structure that we had at 28.02, and with no excess here, we will be staying and building acceptance and value in the lower part of the range, and that could bring further downside. But as we always say, anything can happen because odds are just odds. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Any opinions, news, research, analysis, prices, or other information offered by Grasping the Market is provided as general market commentary and does not constitute or replace investment advice. Grasping the Market accepts no liability for any loss or damage, including without limitation to any loss of profit which may arise directly or indirectly from the use or reliance on such information.